What would you say? And more importantly, what would you do with your portfolio if we were able to show you that the major on-chain data analytics, the one that almost everyone reviews on Twitter, on YouTube, and refers to as a major signal that the markets must boom, is in fact a great contrary indicator. I'm talking about the Bitcoin ETF flows. In this video, I want to show you how this has been a very good signal to do the opposite to the crowds. So make sure you've hit that like button, share it with a friend, especially those friends on, I don't know, YouTube or Twitter who refer to the flows of Bitcoin ETFs as a way to suggest that the markets must pump, when in fact, they're screwing you. I personally think it's very lazy analysis, but I'll leave that decision up to you after you've seen what it is that I'm going to show you in today's video. So make sure you've hit that like button and subscribe to the channel. It is your home of macro cycle analysis with me, Jason Pizzino. We're covering Bitcoin, cryptos, the stock markets, and of course the real estate cycle. We're macro investors covering all of the markets here. Let's start it off with the traditional markets, going through some data for the macro cycle before I get into Bitcoin and cryptocurrencies and looking at this particular signal. But I just want to start today's video out with this particular quote yet again, as we're in our everything bubble, our everything bull market. Things are heading up overall in the long term. Remember, we're looking at the longer term picture here. Yes, cryptos have been down for 48 hours and we've lost a bit of money on our altcoins, but we're looking at the overall picture here. It hasn't changed. The views remain the same. Markets continue up, and markets can remain irrational longer than you can remain solvent. This goes in the face of over 90% of analysts out there that have looked for corrections in the markets over and over and over again. It just has not happened over the last couple of years. This is what we're seeing almost on a daily basis at the moment. New highest daily close in history. After hours open, new all-time high again. And yes, the old comment comes in and says, well, a top forms at an all-time high. It sure does. But there can be multiple all-time highs leading into that final top, as we've seen in recent history. In 2021, there was a top on January 3rd of 2022. So essentially the entirety of 2021, you had new all-time highs every other day, and then eventually you do get a market rolling over. But markets can remain irrational longer than you can remain solvent. So trying to call a top every single day probably isn't the best use of funds. Here we are on the S&P 500. So the update, another daily highest close, another new all-time high. NASDAQ, another new all-time high daily close. It was a couple of points, well, yeah, 1 full point off a new all-time high price. And the market has slowed just a little within these last few hours. But again, new all-time high prices almost every single day over the last couple of weeks. So markets continue higher. What is this data looking like? What is the economic data saying out there? Should these markets correct? Well, a major one that I've looked at, and I try to dispel the fallacies around these particular data points, because these news headlines come and go. They are popular and then they die off again once the data changes, or however that analyst is looking at the data. The main theory here is that unemployment ticks up, therefore we must go into recession, as it's happened in the past several times. And so that's what this particular objective data is looking at, unemployment rate versus a 36-month moving average. I like that. You can actually put two pieces of the puzzle together and have a look precisely, as opposed to just unemployment went up and the gray area says recession. At least you've got something else here to look at. You've got a 36-month moving average as well, which is of course on top of the data itself anyway. But just scrolling into the actual results, you can see here S&P 500 after unemployment crosses above the 36-month moving average. Since the 1960s, you've got a few losses here after 12 months. And in particular, 2008 was a very big loss, 40% down 12 months later when that signal occurred. So there is your signal there. Market went down from that point. There's 2001, market went down from that point. But then you got 2020, market was up, we're still up. You've got 1990s, market went up and then went ballistic. You've got the 1980 move here, market went up. There was the mid-cycle correction, as I'll talk about in a moment, and then the market went ballistic after that. You got the 1974, market found a bottom and then traded up into that first half of the real estate cycle. And here are the last couple of data points there, down, and then eventually you had that next peak as well. So there's still several years in it. The unemployment rate ticks up, therefore we must see a recession very soon. And I just want to suggest that that is probably unlikely at this stage if it's a very soon, as in 2024. I can't see that happening at this rate in 2024. Another piece here is the S&P 500 after going 330 days without a 2% down day. Plenty of points here, 10 essentially. You've got the 60s and the 70s here where the market was basically flat, but we're seeing a lot more money printing happening this time around as opposed to what happened before. And you want to call the market going up on inflation or money printing or whatever you want to call it. At the end of the day, you got to choose, do you keep your money on the sideline or do you put it into the market where it is rising, whether that's real estate, whether it's stock market, whether maybe it's Bitcoin or crypto for you. So you've got to make that decision, even if you still believe that everything is rigged, everything's manipulated, the government keeps printing money, things are going to end bad. They probably do, but you got to do something with your money. That's what they're trying to force investors to do. So you got to choose what you do. And I guess it comes down to the timing. What do you think is going to happen from this point? I'm suggesting, and what I'm doing is I think there's still a fair bit more time to go. So come back to the quote again, markets can remain irrational longer than you can remain solvent. And we've heard all of the stories why the market should collapse. And they talked about it throughout 2023 and now into 2024, and it still hasn't collapsed. And the majority have missed out on some pretty significant gains to the upside. This is the stage that I believe we're in, the winner's curse. 2024 is somewhere around this zone. So even if I haven't moved the circle on my chart here, essentially it's in the winner's curse. This bend in the chart to this bend here, winner's curse. Then things get a little bit iffy. The market rolls over, takes more years than what we've seen in the past throughout that cycle, coming out of the low of 2009 through to 2011, and then you start the cycle again. So more time to go into the peak, real estate and the economic cycle. Maybe stocks go a little bit higher for longer before we all come crashing down together. And that's my overall view of the market. So Bitcoin, cryptocurrencies, where do we currently sit? 3-day down rule. This is what we've been covering here on the channel. Essentially, I repeat it because that is one of my major theories as to why the market has not reached a new all-time high yet, but I think there is one coming. We had a very significant signal here, and that has kept the market underneath the old all-time high. We had peak euphoria at the top, and then we had peak ETF inflows. Very, very peak in ETF inflows. There it is, March 12th, 13,700 inflows, and the peak of the price was on the 14th, but essentially the price didn't go much further from the 11th. It hit that price there at 73,000, and then nothing much happened from that point. You had the rollover, you had 3-day down rule, you had peak complacency here with a lot calling this the bottom, and the market is going to hit, well, Bitcoin's going to hit 80,000 or 100,000, and it just didn't happen. So yeah, personally from my analysis, it's always important to remember how the market sentiment occurred at those times, because you've got the objective data here with the chart, you've got your Gann swing indicator, but when it comes to the market sentiment and the feeling and the headlines at the time, it's very hard to piece that together on top of a chart when you haven't experienced it at the time, you haven't lived through these moves themselves. So over the last 1 to 2 days, that's been a fair bit of fear that has come into Bitcoin and cryptos. And Bitcoin, again, has just hit 50%, $64,000, and closed above the major 50% of the correction, above $65,000. So a test of this range and then a close above that range. So still looking reasonably good, a little bit more volume coming into it at this stage. So really nothing to be overly concerned about when it comes to BTC. The concerning point could be if you get a breakdown of 60K. Plenty of bases formed there, so a breakdown of 60K would be probably the concerning part, back down to 56K. For now, I can't see anything too concerning as the market is testing these levels and then closing above those. How can it go further from this point? That's usually a big question that is asked. I'm focused on the psychology? And that big question is often asked here. Look at this, just as an example, as I scroll through here, I struggle with where the capital would come from. Whose money will push Bitcoin price up? The economy is in really bad shape. Higher interest rates, war, glooming, yada, yada, yada. So this is still a main feeling in the market, at least from what I can see, of course. And I don't think that this is warranted at this stage of the cycle. I suggest here in this post that we are in this disbelief stage. Again, we've had multiple moves to the upside for Bitcoin. We've had the move out of the banking crisis low into this peak. That was definitely some disbelief there. How could the markets go up out of a banking crisis that should have collapsed the entire market? That's over 12 months ago now. Most people probably don't even remember that level of fear that was spread throughout the markets, and they all went up from that point a long way off. Another disbelief, we had Bitcoin ETF top, and then finally another disbelief peak here, which is peak euphoria. ETF inflows are massive, the biggest that we've ever seen. Why isn't the market going up from this point? Disbelief, in my opinion. So if that is disbelief, then I think maybe we've got this sort of stage to go. At one point, I was thinking maybe we're in the hope. Wasn't sure if we got to optimism yet, but I thought we maybe could be in that sort of period. But as we see the market correct, Bitcoin and cryptocurrencies, you really are seeing a lot of this comment here. This rally will fail like others. And that is the infighting between it's a bear trap, meaning that's a trap there and we're going to go higher, and it's over. Just pack it up, guys. It's over. Come back in 4 years. The market will be ready to go by then. So I think, or I feel, as well as I think, that we could be somewhere in this sort of disbelief correction, lining up ready to go for this hope, optimism, belief, thrill, and mega euphoria, if in fact here is where we are in the final stage of the macro landscape, the macro financial landscape of the real estate cycle. Remember, the most amount of money in the world is in land, and then it spreads out over into your stock markets and commodities, and flows down into Bitcoin and cryptocurrencies, which are very small comparatively speaking. So that's why this real estate and economic cycle is the most important to follow. Overall, seems like we're still in a healthy place for this cycle, especially if Bitcoin continues to consolidate at these levels. These levels being above that 60K, and eventually I think we'll get that pump out of these prices. And I've talked about that in previous videos. I suggest subscribing to the channel, like the content up, so you can see more of this in your newsfeed and hopefully less of the Moonboy stuff. And if you are interested, check out the free crypto economic report that came out yesterday. So if you are subscribed, you should see that. And we've got the end of financial year sale starting in roughly 36 hours. You'll get those updates if you subscribe to this report. Plus, you'll also get access to our Ultimate Traders Accelerator once that is live to the public. Right now, it's live to TIA Premium members and TIA members. So when that is public, you'll get access to it absolutely free. Join the crypto and economic report over there. All right, guys, this is where we sit now with the ETF and that contrarian indicator. There was a lot of hype around this time here in March. Now, I've got a few dates that I want to have a look at on the chart and how it's shown significant turns for cryptos and for altcoins, and some lows as well. So you got a few major dates here. You got the 11th of January. You've got another one here around the 13th of February. You have another one, the 12th of March. Pretty similar dates every single month, right? The 11th, 12th, 13th here. And then we had the 4th of June, which was another very significant move to the top. And another date to remember here, you've got the low, May 9th. So if you have a look at these on the chart, they come up with some very interesting turns in the market. The 11th, Bitcoin ETF top. So some of the biggest flows coming into the market, something for the masses to get hyped up about, actually corrected the market. Now, it doesn't mean that you have to get a collapse, but you do see turns in the market. That was your 11th of January. Now, the next one up was in February. It was around the 12th. So it's about this day here. You saw another move, one more day, and then it paused the market. So a little less than what you saw back here on the 11th of January. But nonetheless, there was still a pause in the market. And in terms of how significant that move was to get any sort of pause is a pretty big feat from the market. So you've got a huge inflow day here on the 13th. You've got the 13th of Feb right here. And then you got one more big day up and then basically a pause for that many days, 12 days. So it doesn't look like much there, but you can see what comes next. And there was a huge, very, very strong push to the upside, probably by late retail coming in. And so, as I said, to hold up the market in the midst of a pretty strong push is a pretty decent feat. Now, you get towards the peak here, peak euphoria of BTC, and that next big inflow day here is 12th of March, another day there, 13th, but we're looking at the 12th here because it's pretty much the biggest, just beating the ETF release there on the, or the day after that on the 11th. And you can see the 12th is right there. Basically, it did not go any higher than that point. So massive inflows crash the market or reverses the market, gives us our 3-day down signal as we looked at here, which then allowed us to look at the timeframes going back through history when you see this 3-day down signal from very significant turns, roughly 4 to 6 months underneath the top from where that signal occurred. And here it is. We're at 97 days, so getting very close to that 4 months. I know I've talked about it a lot, but I am looking at the macro cycle rather than look at the charts hourly or 4 hourly because that's the more short term. I'm showing you the macro cycle here and how long these things do take to play out. It's hard to have that belief at that time, as many of you know from the channel, and suggest that maybe we're not going to go up from here when the hysteria was ballistic, like really ballistic. And I honestly hate those times because of the type of comments and stuff. But at the end of the day, I love helping as many people as possible. And so I put that aside and hopefully you guys see how these signals continue to play out time and time again, even though they take some time to, again, play out in the markets. Peak complacency followed, et cetera, et cetera. So we're at 97 days. Now we've got, that was March. Let's get into April and May. So you got May as the low. But more importantly, I want to look at the tops first. There's June 4th. And there is June 4th, fourth highest ETF inflows. June 4th, bam. Market stops dead, $72,000. At the time, you're thinking, all right, well, we've got a little correction here. It's nothing to worry about, 2%, nothing to worry about, another 3%. And then you get these last couple of days. Again, not that big of a deal, 0.2 and only 2%. And overall, from the top to the lows, only 11%. But you guys know yourself that, well, this doesn't really do us much help, does it? The fear and greed index. We take a look at the other fear and greed index. It's come from the extreme greed through to greed, now into neutral. And I had some posts up here on X just looking at the overall fear of the market. And you can definitely see that it's increased a lot more than what this one is giving it credit for. So overall, 11% down for Bitcoin, a lot more for different altcoins. But again, this damned ETF inflows is now, after 5 months of data, it's showing for now to be a pretty decent leading indicator of peak FOMO. Peak FOMO. And there's the 1st of May, peak fear. That is 1st of May right there. So you got the low there, a lot of people selling out, peak fear. So again, as I said in the intro, this is probably why I would be steering well clear of analysts, your favorite YouTubers that present a lot of data and charts and all this stuff. Me too. Do your own research, of course. I'm just sharing with you what I see. And I'll be steering well clear of lazy analysis, looking at money flowing in and out, or on-chain analysis. And if you care to share that sort of stuff, share this sort of stuff, go ahead. Please do so. Hopefully it helps a few more people out so they don't get wrecked at these peaks where it's very easy to think, oh, there's a lot more people coming into the market. The ETFs won't be wrong on this, will they? And, well, basically every single time it's given you some sort of indicator, even if it's a short-term one like February, a major low so far in May 1st, and that lower swing top again in June. It showed up here on the chart, and then this sort of correction. At least it can help you position your portfolios a little safer, and you can sleep a little better at night once you see these signals play up time and time again. On the total cryptocurrency market cap, how this turns crypto, there is your 1st of May low, move up. There is your June 4th, move down. Here is your peak there on the 12th of May. didn't go much further, correction. And here are your other two here. That's the February one, bit of a pause considering where it's come from and the hype around ETFs at the time. And then again, 11th of January, lower highs, market corrects into this bottom. Do I think it's over yet? No, I've said that many times before. I think we're still in a stealth move. Strong cryptos are still holding up the charts relatively well above their 50% levels. Here's your ETH move over the last couple of days. It basically bounced off those two twice here at 50% at the moment. And you still got the previous ranges that it could hold support at, which I've talked about. So there's $3,200 at the moment, holding above 3,400 at that 50% level. You've also got Solana that we've looked at, $137. You've got a bit of volume coming in, bit of a move up there, and still above these particular lows, testing this 50% at 137. And a look at Render now at 750, where this thing could head to. Still just above this particular low. And at the moment, you've got your support and resistance zone back through $3 to $5 as well. So keep an eye on these levels. You've got your 50% support and resistance zones. Do you buy the dip or do you buy the breakout, as we looked at in yesterday's video? As for Bitcoin, still holding up pretty good, and 50% levels still intact here. Remember the time frame, 4 to 6 months, keep that in mind. That takes us out, if we were to go all the way through to the 6 months, you want your 180 days, roughly around September. So I'm looking somewhere in Q3 to give us an answer as to whether this is our reaccumulation or distribution, which would mean a collapse. I'm obviously leaning more on the side of reaccumulation at this zone to break out over in Q3. End of the day, market will tell its story. Like, subscribe to the channel, and of course, link in the top of the video description to join our TIA Ultimate Trader Accelerator and the sale that's coming up at the end of this week. Thanks again for all of your support on the videos, and I'll be back with some more dad jokes in future content. Peace out.